Hello, everyone, and welcome to Jewish Organization's Journey to Impact Investing in Israel. I'm honored to be joined by two great panelists, Dalia Black and Luis Jacobs. Dalia is founder and principal at Weave Impact and guides clients in implementing social impact investing strategies in Israel. She also serves as the lead impact investment consultant for UJIA. Luis Jacobs is chair of the board of UJIA. UJIA is the largest Jewish charitable organization in the UK, building connections between UK Jewry and Israel. Today, we will be exploring UJIA's journey to impact investing in Israel. So let's begin with understanding what led UJIA to consider impact investing in Israel. The organization has traditionally operated by raising philanthropic funds to solve social issues in Israel. But in 2016, you began to consider impact investing. So Luis, what was the motivation for the organization to begin to explore impact investing?
First of all, thank you, Jacob, for inviting us here today to talk about our journey. UJIA is 100 years old, and as Jacob said, we've always engaged in traditional methods of fundraising. We could see that the climate was changing, and it was important that we thought about new ways to engage this community here in the UK with Israel. The world was moving on. Diaspora relations with Israel was changing, and we knew that we needed to change with it. As an example, we could see that the younger generation are moving away from building buildings and from capital projects. They wanted to be involved in helping to solve a social problem in Israel.
Thank you, Luis. And that the world is certainly has changed, and I understand that to be a real challenge and to have the strong need for engagement. And I'm curious also for you, from a personal perspective, what was your familiarity, what was your interest in impact investing before this process started?
I've always thought that the idea that you could raise money with the intention of generating a measurable, beneficial social impact alongside, and this is really important, a financial return, was the way that we should all be thinking now about philanthropy. As I said, we were very clear that we needed to break out of the traditional mold. The fact it is measurable is also really important. Our donors want to be able to see us measure our impact. And it was also a win-win in that we generate an evergreen fund, which means that money is returned to UJIA that we can put back into helping solve further social issues. It is not money used once and is never seen again, but money that can be used time and time again. And our donors really like that, and they really like the concept for all these different and various reasons.
I imagine that was especially also important for UJIA. The institution doesn't have an endowment, so just clarify that for many of our United States institutions on the call today, that there's a difference there. And so the financial sustainability piece becomes all the more important when you need to raise the philanthropy every single year. Louise, a follow-up question. So the conversation to explore this idea of impact investing got brought to the board. You approved a pilot of impact investing in Israel, but you had some very specific goals. And it wasn't just a traditional investing approach where the ultimate goal is to maximize financial returns. Can you tell us, how did you frame the primary goals of the program?
Okay, first of all, thank you for pointing out, we don't have endowments. We have to raise the funds every single year to carry out the programs and projects that we need to do to engage our community here in the UK with Israel. The other thing I should say, that this was a real team effort. We couldn't have done this without the trustees and the professionals all working alongside each other. And this is really important that other organizations understand this. We all worked on this together. We were all on the same page. And no, it was not just about maximizing financial return. We were equally interested in solving important social issues in Israel with minority communities specifically. And I know Dalia will say a little bit more about that later. But we are working with Bedouins, with women, with the Haredim, and with the Israeli Arabs. As well as, really importantly, we are connecting our community here in the UK with Israel. Again, Dalia will explain more. But this has attracted the attention of the younger generation. That generation is often so difficult to attract and connect and engage with. They want to be involved not only in the funding, but also in the due diligence. They want to be part of a team that is doing something new, that is doing something innovative, and where they can see the monies are returned.
Great. And so those three goals you had, certainly the financial return was a part of the concern, but also making an actual impact on the minority communities that you mentioned, and then engaging your local community in connection to Israel. And Dalia, I'd like to follow up with that. Those goals really affected how you went about investing. And just one example that I recall you mentioning to me, that at the beginning of the process you had considered investing in funds, and you decided instead, in the end, to invest directly in social businesses. Can you just share more about that?
Sure. Thank you, Rabbi Siegel, and to Julie. I'm super excited to be at the conference and presenting from Tel Aviv this evening. So there are several fantastic impact venture funds in Israel today, and we work closely with all of them. However, in the case of the UJA, the SI3 Investment Committee, 12 leading UK business professionals, decided early on that based on the size of the initial capital we had available, and in order to have a true engaging experience with the enterprises and the social issues they're tackling, we needed to focus on direct equity investments or direct loans. We're investing with program capital, like Louise mentioned, raised annually, and direct investing is, of course, a riskier option than the funds. So we have a thorough due diligence process that not only looks at the financial side, the social side, but actually we also analyze how engaging we believe that this new relationship will be for British Jews in Israel. Can they host a group? Can we visit them? Is this story going to be a story that the donor base in the UK can understand? Potential investments have to meet all three criteria for them to be approved.
Thank you, Dalia. And you mentioned the investment committee. So I'd like to ask, one of the challenges at the beginning of this process that your organization was sensitive to, and many organizations are, about not wanting to cannibalize its own philanthropy, especially because UJA doesn't have an endowment. So that put some constraints on you, Dalia, as you said about creating an investment committee. Can you tell us about the challenge of creating an investment committee for the SI3 program and how you overcame that?
Sure. So first of all, thank you. And it's a question, the cannibalizing question comes up often. UJA continues to give philanthropy and will always continue to do so. SI3 is a new program. It needs new funders, additional capital. And actually in the UK, there is a mature impact investing ecosystem. And so the language is familiar also in the general investment world. So we look to recruit investment professionals who, A, and perhaps most importantly, have a strong affinity with Israel. We're keen to dive into impact investing, and C, were not involved in the UJA previously. Perhaps most exciting to add is that SI3 has today over 25 British young professionals, millennials, who participate in the online screening process, and this committee is going to double in size in the coming months.
That's a pretty impressive. That's a pretty impressive engagement story, as well as a pretty impressive investment story. Luis, I have another question for you about, at the beginning, another challenge was education. So could you share what it took to educate? You mentioned a partnership between everybody, trustees and staff, and while this might have been familiar to some, it might not have been familiar to others. So what did you have to do to educate your staff and trustees about impact investing?
Yeah, it was tough, and change can be difficult, and we are no exception to that. We had to learn a whole new language about impact investing. And, Dalia came to the UK on several occasions, and we hope one day she'll be able to come back. She came, she talked to trustees, she spoke to staff, she spoke to donors, and this was invaluable in bringing along the team at UJA, both professionals and trustees. We've worked really hard, as this is a new model, to make sure everybody is always on the same page. We also understand that our donors are often sophisticated investors, and we've needed to acknowledge that as well, often more sophisticated than the people who are in some way selling them the product. So we've had to adapt, and we've had to learn as we go along. We've definitely taken people out of their comfort zone. However, it's been a really good, in fact, it's been a great journey. And we could see very early on the benefits that this was bringing to the organisation. We also held donor events in London. Our beneficiaries from Israel came over and spoke to staff and spoke to donors. And of course, we've taken the team from the UK out to Israel to see the projects firsthand, because nothing ever beats that experience of seeing the projects on the ground.
Thank you. And I think the experience you described and the rigorous education you did will be familiar to some on the call today. The need for education, this is a new way of looking at things, but it can be really, as you noted, really engaging, really productive, really meaningful for the institution. So Dalia, once the organization decided to move forward with impact investing, you know, as part of this education process, needed to share with UJA a broader understanding of the impact investing ecosystem in Israel that met UJA's needs and goals. We'd love for you to share that presentation now with us.
Great, with pleasure. It's a slightly abridged version, but I'll be happy to answer any follow-on questions. So what we've done is we've applied the OECD Social Impact Investment Market Framework, which requires social and environmental needs. These, unfortunately, we are not short of in Israel, together with a supply of capital, private and public, intermediaries such as funds, venture, or debt, healthy deal flow, demand, and field builders such as incubators and accelerators. Not only does Israel have all of the above well in place and growing, we of course also have the IDF that drives creative thinking and managerial development from a really early age, and a booming startup ecosystem that is showing more and more interest in impact themes such as assistive technologies, agriculture technology, edtech, and so on. Today, there are actually over 500 impact technology startups in Israel. Perhaps interestingly, based on our current climate, is to share that in recent weeks, the ecosystem has also proved that it knows how to pivot and fast. The government's Innovation Authority launched a 50 million shekel call for impact technologies that are COVID-related solutions, and at the same time, again, launched its emergency loan fund for small businesses, which is backed by impact investors. Both were up and running by mid-March, when the rest of us were just beginning to go into lockdown. So when there's a culture that encourages risk-taking, a growing ground for innovation, plus a super strong Jewish philanthropic ecosystem, Israel is a winning ground for impact investing. Next slide, please. So I love this slide. And I think that Israel sits deep in the Jewish values of everyone who's on the call. So really, it should be a no-brainer by now for us to be looking for sustainable and scalable solutions to the complex social issues that the country's facing. So the slide illustrates two very strong messages. One, whatever your social goals are in Israel, there are existing business models today that can accelerate your ability to meet those goals. And two, whatever your risk reward appetite is, there are a plethora of investment opportunities across all of the asset classes to meet your specific needs. To give you a little bit of an insight, Israel has today in place 3 social impact bonds, with more in development, a social bank in development, 5 large active social real estate projects, a range of microfinance funds for Arab women, refugees, the Ethiopian community, impact technology funds, and a wide variety of direct investment opportunities, whether in impact tech startups or through numerous businesses with a social mission, and the list goes on. As funders have become more confident with using these tools like the UJA, they are actually influencing their partners in Israel to think more creatively about creating self-generating income models, to change the discourse, to deal with social issues in a sustainable and scalable manner. Next slide, please. So this is a snapshot of what Israel's ecosystem looks like in practice, and it's by no means conclusive. Since most of you on the line are funders, I want to focus on current sources of capital that we have the opportunity to see. In terms of the UJA's portfolio, we'll delve deeper into that a little later on. So for now, what you can see is that the spread of capital ranges from pure grants. So for example, Rothschild Caesarea Foundation issues an annual $1 million matching grant for seeding impact investment projects, to the Max Barney Foundation that's focused on using interest-free debt to promote innovative sustainable models, Marla and Gideon Stein, who have invested in the funds Bridges, Zora, and Value Squared, all seeking market returns, to Proceed, for example, who are a private family wealth of the Yovel Maoz family, who are 100% impact invested and have a full balanced portfolio approach with investments with varied risk return profiles. In addition to all of those capital sources, we have, of course, capital from the government and growing institutional capital. So I think that the message that you should take from a little bit of an insight of Israel's ecosystem is that whatever the source of funding that you have available to you, the opportunities are here. You just need to be willing and open to explore something new like the UJA was.
Thank you very much, Dalia, for that presentation. So Dalia, let's continue the story. Let's turn to UJA's next steps, that first year of making investments through SI3. You had some interesting learnings that first year. For example, UJA has specific areas that it has traditionally supported from its philanthropy, for example, the Galil. How did that affect your process the first year? How did that affect your impact investing pipeline? And how has that changed since?
Okay, so at the UJA, their philanthropic mission was focused on the specific geographic region of the Galil, which is found in the north of Israel. So in the first call for proposals for impact investments, we gave priority to this region. And to be honest, deal flow was limited and definitely not as varied as what we were looking for. The ecosystem has grown significantly since 2016, but at that point, it was still too immature to focus on a narrow geographic region. So we did keep UJA's clear social mission, the areas of education, employment, and economic development, but we widened the geographic focus, and the trustees approved us looking at investments across the whole of Israel and not limiting ourselves. What I would say is that my advice to anyone considering direct impact investments in Israel is start broad, and once you've proven that you have healthy deal flow in your areas of mission focus, then go narrower and not the other way around.
Yeah, I think that's very useful advice for institutions. It's a common challenge for institutions who have a mission on the grant side or on the philanthropic side. And the question of how closely does the impact investing side need to align with those very specific goals sometimes. So another question for you, Dalia, about that first year. There was one investment that first year that had some challenges. The investment did in the end work out financially, but it was a bit of a painful experience. Could you share more about that, and especially what you learned for SI3's due diligence process?
So I have to be fair and say it wasn't only painful for us, but it was also painful for the recipient. We realized early on that however tempting the strong social impact element might be, without a sturdy revenue model alongside, it's got to be ruled out in the first screening. So the deal that you're referring to, Rabbi Siegel, it was closer to a bridge loan to an NGO rather than a loan to an income generating business that was sitting under an NGO. So since then, we do not look at any proposal from an NGO that does not have a clear, separate business model with a business plan, Excel, and all the other details that you would need for financial due diligence on any other business.
Great, thank you for sharing that. So Dalia, SI3 has now gone on for several iterations. You've built up a whole portfolio of investments. Could you share a couple of examples of investments UJA has made and some specifics, what they've looked like?
Sure, with pleasure. So in this slide, you can see UJA's impact investing portfolio in Israel. UJA has approved 10 deals to date, 8 are loans, 2 are equity investments. And I think perhaps what would be most interesting to the participants is if we delve into an example of a loan and an example of an equity investment. So if looking at the loans we've made, and we take, for example, Al Sanabo, which is a really fantastic project. It's a catering company employing and training Bedouin women, making over 12,000 hot meals a day for school children. Obviously, these numbers are pre-COVID, although this week all of Israel's schools are officially reopened, and the factory is looking to start making meals again from the beginning of next week. So unemployment for Bedouin women is over 70%, and over 50% of the Bedouin population are living in poverty. They are one of the most, if not the most, vulnerable population here in Israel. The factory is actually at full capacity and is looking to fund an expansion. And this is a classic example of what is often referred to, and people have mentioned it on the conference yesterday and today, as blended finance, a blend of grant and investment capital. So UJA's involvement actually started out as a grant, and at a later stage, SI3 approved an interest-bearing loan for the expansion of the business. UJA have actually also used their catering for some of their missions, youth tours in Israel, enjoying a real triple bottom line of social, financial, and engagement return. And in terms of equity, which perhaps is a little bit more complicated, in particular when you're using program capital, if we look at Hadarim, it's a social and urban renewal project looking to uplift one of the poorest neighborhoods in Haifa. UJA approved an equity investment into a real estate development that is backed by a consortium made up of, interestingly, mostly Israeli impact investors, and will provide affordable housing solutions for young communities that will receive 5 to 10 years fixed rental, which today in Israel is unheard of. So it creates a double social return, affordable housing, and the creation of a vibrant urban center. And existing residents will also remain, yet in a happier, brighter environment. Expected returns on this investment are good, although concessionary, since built into this model is the expense for developing the local community businesses and art projects.
Thank you very much, Dalia, for those examples. So, Luis, this is a question about advice for other institutions. Now that you've gone through this process, what would you say to an institution who says, you know, why don't we just grant to Israel? Why bother going through this whole process?
Thank you. It's a good question. However, if we really believe that it's important that the next generation has a relationship with Israel, then we need to keep adapting and moving forward to make this happen. We need to ensure that even traditional 100-year-old organizations like UJA move with the times. We need to take some risks, and we were prepared to take a risk on this. And we need to be innovative, and we need to make sure that at all times we think about things like donors want to measure their impact. And of course, we want to ensure that we're always helping to try and solve a social problem in Israel. A long way of saying, yes, complicated. It took time to get right. It was a real commitment, but it's been worth it, and it remains worth it.
Good. And Dalia, maybe you can also share from the financial side. Has the capital started to come back and get recycled?
Yes, it has. Capital is coming back. At the moment, it's coming back according to the schedule of payments, which is on average spread across 4 or 5 years. Usually, we also give 1-year grace period. We have no defaults to date, as they say here in Israel. And we have 1 loan from the first cycle that's been fully repaid. We do anticipate that COVID impact will cause a delay in loan repayment of 2, perhaps 3 of the loans. However, for now, there are no defaults expected. However, on the note of COVID, we do feel now more than ever that this form of capital is going to be absolutely vital for recovery.
Great, thank you for touching on COVID. I'm glad you mentioned that. I wanted to ask if we didn't get to it, but yeah, so it's impressive to hear that the portfolio has the resilience to, you know, be strong throughout the pandemic that we're witnessing. So I'd like to ask a final question. I'll turn it to Luis. You mentioned UJA is a 100-year-old philanthropic institution. You've had to be innovative. You've taken the risk to develop this program. Can you share what this program has meant? What has SI3, what have impact investments in Israel meant to UGIA?
Okay, well, I hope that what you've heard is that across the board, our impact investment initiative has surpassed our expectations. And we're now thinking about other product offerings such as donor advised funds and other things that we can use to develop this offering. It's shown us a completely different way to fundraise for Israel. And it has meant, really importantly, that it's differentiated us from other organisations in the UK that is raising money for Israel. We've tried to carve out for ourselves an innovative niche and to make ourselves look different. The competition is fierce. But I should add, importantly, that this type of fundraising is not for everyone. We are still offering donors the more traditional fundraising route to donate. And it's courses for horses. And we're very careful about the donors who we talk to about this offering. But as time has gone on, we are offering it to more and more donors, and it's being accepted by more and more of them. So I think that's a sign of success for us. And importantly, and I know I've said this a number of times, as it becomes harder to connect the next generation with Israel, we believe that for us in the UK, SI3 is our model for doing that. As we move into our centenary, there will no doubt be other models, and our job is to think about that, how to keep this community here engaged with Israel. But for the time being, our job and our role is to embed this type of philanthropy fully into the UK Jewish community.
Great. Thank you very much, Dalia and Louise. Thank you both for joining us from the UK and from Israel in the evening, your times, or afternoon, evening. So really appreciate your time and joining us. And we will now transition to the next session, the hardest part of the how impact measurement.